Welcome to India Business Report. I'm Yogita Lamai in Mumbai. Coming up in this week's program, going for growth. With economic expansion slowing down in India, business leaders voice their views. And how will the slowdown hit people's pockets and livelihoods? Pumping it up. With petrol prices rising, the head of Indian Oil explains why. Saving the planet and making a profit. We look at the growth of green technology startups in India. It seems the brakes are on for Asia's third largest powerhouse as latest growth figures revealed a severe slowdown. Business leaders are worried that if the government doesn't step in now, India's reputation could be jeopardized. SHILPA KANNAN has been speaking to industry to examine what can be done to stem the severe downturn.
So if the growth is going down, let us not look at...
What's the solution for the sagging economy, and can these men come up with it?
In our detailed paper...
Industry leaders got together this week in Delhi to air their thoughts. They don't think the government is taking the slowdown seriously enough and fear things could get far worse.
Are we really meeting the aspirations of our youth? Are we really creating employment? I think that's the problem we need to address. So this economic crisis is not about whether industry will do well or not, but whether we will create the employment and jobs which are required to be created. And I think that should be our primary focus today.
A gasping elephant, that's what HSBC labelled India after economic growth dropped to a 9-year low of 6.5%. In the past year, the country has been in the grips of what many here are calling a policy paralysis. Reforms have been stalled, investments deferred, and the Indian rupee has seen one of the worst declines among Asian currencies, dropping more than 27% against the US dollar. The rupee's new low means that the overseas buying power of Indian firms and households has fallen. High inflation, a high fiscal deficit with low growth has led to many saying that this is a crisis of India's making.
More than 90% are domestic factors and within our hand. It is not something that we have to do which is miraculous, which the government can do very quickly according to me within a month. Interest rates, FDI coming in. So those are signals which give that we mean business, we invite investments whether within the country or from outside the country. So we have to get the ball rolling.
Farming contributes to the livelihoods of 2/3 of the population. Boosting agriculture growth is seen as another solution from industry leaders who want the government to allow foreign direct investment in areas like multi-brand retail. That would allow supermarkets like Walmart and Tesco to operate in the country. But they're being opposed by powerful regional politicians like West Bengal's Chief Minister Mamata Banerjee, who has so far failed to support many crucial economic reforms. That's a big worry for industry leaders.
And there has to be a joint introspection in terms of understanding that what we are doing so far, is it helping galvanize growth or is it hindering growth? So that we clearly have to be, but here the onus and the has to be taken by the ruling coalition and the ruling parties to bring people together and try and hammer out a broad consensus.
One priority for the government is to improve the country's poor infrastructure, which has long been a hindrance to the growth. In response to concerns of big business, Indian Prime Minister Manmohan Singh unveiled a series of projects this week to kickstart private sector investment. It's hoped that this will be one step in powering growth and preventing a further slump for Asia's third largest economy.
Indian stock markets were hit after a report in the US showed far less growth in jobs than was expected. Could India's economic downturn affect employment generation in the country too? Most manufacturers have already put expansion plans on hold and recruitment has slowed down in this sector. Experts say job security could be at risk if investments are not triggered. So what does poor growth mean for ordinary Indian citizens? I've been taking a look. Rolling out expansion plans is now a thing of the past for Indian manufacturers. Most businesses like this electronic panel maker in Navi Mumbai are finding it difficult to make ends meet due to rising costs. High inflation means the company has to make do with fewer hands at work than required.
I would have needed 20 to 25 people more on my lines, which today I am restricting to employ solely for the reason is that I need to cover up with the rising costs, the salaries that I would have to pay my existing staff does not allow me to bring in more worker. Because if I brought in the more worker, I could not justify giving them their rise which they would need to survive in today's time, wherein we are living in a 45% food inflation.
While India has not been hit by large-scale downsizing, most manufacturers have stalled expansion plans and recruitments have been put on hold. Economists say there will be reason to worry if growth is not triggered soon.
This is regarding an opening with the German MNC company.
Recruitment agencies like this one are already seeing a slump in jobs being advertised in sectors like manufacturing, IT, banking, finance and construction.
We had already started feeling the global slowdown since last 6 months, particularly in manufacturing sector. We were recruiting around 150 people per month, which has come down to probably 50 to 60 people per month. So that is a substantial drop.
Rising costs are also having an effect on household consumption, which is one of the mainstays of India's economic growth. Indian shoppers have become cautious now, particularly when spending on anything more than basic items.
There was a time when you could go in a month, you could go 3-4 times out with your family for a good dinner to a good restaurant. Today you have to think twice before that.
I have to think a little bit before spending too much. Like I go for shopping, fine, a little bit of clothes are too much, but then not more than that.
But despite the higher costs and accelerating inflation, there is some good news for retailers. Official figures show that private consumption, at least on basic everyday products, has continued to grow in the past year, even though people are paying more.
Like basic food, basic clothing, basic housing, all these things do constitute something around 60-70% of Indian consumption. That doesn't go away anytime quickly. So that part stays. Some kind of lifestyle consumption, automobiles or high-end, some of the high-end urban items. These things can see some kind of a dampening effect.
The worry now is that should prices keep climbing, then consumers are going to start cutting back on more than just luxury goods. That's why India's central bank recently hinted at a possible interest rate cut. And while experts say their room for maneuver is limited, what is not in doubt is that keeping consumers and companies spending will be key to reviving India's growth. Is slower economic growth here to stay, or could India bounce back after recent lows? I spoke to economist Dharmakirti Joshi to find out what to expect in the months ahead. To begin with, the question everyone here is asking, is this rock bottom or do you expect the Indian economy to slide even further?
Well, I think if the monsoons are normal and the Eurozone doesn't spin out of control, we believe that growth can be sustained at 6.5%. But in the event that Eurozone crisis deepens, Greece exits for instance, or monsoons turn out to be subnormal, then growth can slide below 6%.
What areas do you think really need to be focused on to revive the economy at this point?
We need to improve the investments in the economy. The projects which are in the pipeline, which are being stuck due to either environmental issues or due to slow decision making in the government, they need to be pushed quickly, because that's where a major problem is. I think the investment slowdown in the economy.
Is there really room for the central bank, for the RBI to step in, for them to have any sort of rate cuts?
Well, very limited. I mean, I should say that the inflation in the economy is still above their comfort zone and is likely to remain that. And I perceive that inflation could even go up further in the coming months. Though there is some good news emanating from global commodity and crude prices which have depressed, I think that will provide the central bank some room for cutting interest rates going ahead. But I think that's very limited.
So you don't think there's much scope, but what about the government? What kind of scope does the government have to cut the fiscal deficit?
Unfortunately, you can't cut fiscal deficit in a slowing growth environment because the revenues are weak. And on top of that, I think they need to take really hard decisions on the subsidy front. I mean, raise the diesel prices, the kerosene prices, the LPG prices quite sharply if they really want to control the expenditure side.
What about the trade gap? Do you see that widening?
Not in the next year, because I think one reason why trade gap will not widen is I think there is good news on the commodity front. So you will see commodity prices reducing, the import value of commodities reducing. Second, I think, is the oil. I presume oil will sustain at below 100 if it does. And that in that scenario, the import bill will reduce. And also the gold imports, which were very high until last year, I think they have also come down very sharply. So the pressure on imports will reduce a little bit.
And taking off from there, you see the rupee strengthening against the dollar.
There are too many unknowns right now. If the Eurozone doesn't spin out of control, then I think by the next year, you will see some return of risk appetite in the advanced countries, and that will bring in capital flows. The rupee is already depreciated so much, the assets have been hammered down, so there is opportunity for investment, I think, which the investor will start exploring once his risk appetite improves.
It's time for a short break now, but don't go away, because when we come back, going green and staying in the black, we take a look at the new wave of clean energy startups in India. Can they make money?